Hi everyone, welcome to this session of the Tiger Academy, US Stock Financial Statements for Beginners. In the previous session, we analyzed the income statements by comparing to personal budgets. It's very simple, huh? In this lesson, we're gonna use the same way to break down the balance sheet. As we mentioned before, the balance sheet is the skeleton of a company. It shows us a company's assets, debts to its suppliers and banks, and money received from shareholders. Only a robust balance sheet will sustain the long-term growth of a company. As the name indicates, a balance sheet must be balanced. In the balance sheet, assets always equal liabilities plus equity. To be specific, assets are the things that a company owns. Liabilities are the debts a company needs to pay. Equity, also known as the book value or net worth of the company, means what left for shareholders. According to the chart below, the formula can be simplified as A equals L plus E. As we did with the income statement, we can compare balance sheets to personal budgets, which will help us better understand balance sheets. Assets can be compared to all the things you own, including cash. The goods can be sold, money lent to friends, and deposit at a bank, etc. Liabilities can be compared to the debts you need to pay, such as credit card bills, installment payments, mortgage, etc. Equity is similar to our savings. As we mentioned before, assets minus liabilities is equity. In this case, your savings. As we have clarified these terms, we can draw up our balance sheet. If you can quickly complete this table, you must know your personal finances very well. Next, we can get the balance sheet of a company by matching the item in your personal budgets against company's assets and liabilities. If we view the balance sheet as a company's skeleton, then assets, liabilities, and equity are the three joints. We shall therefore study in detail the three key joints. Although the balance sheet is complicated, it is easy to understand when we compare it with personal balance sheet. It's all about a company's salary, debts, and savings. Let's quickly walk through the key point of our class. We learned how to draw a company's balance sheet by comparing with personal budgets. We also acquired that the balance sheet is a table summarizes the money a company makes, owes, and saves. This table also reveals a great deal of details on the company's operation. Many professional investors also regularly poured over balance sheets. Why is the balance sheet so important? Because it contains many hidden secrets. In the next lesson, we're gonna learn several common types of balance sheet fraud. See you next time!